297, losses are a function of expected gain. Um,
Yeah.
so he talks about life insurance company, how they run their operations, using like something called mortality table.
Hmm.
So they know like exactly when most people will die and stuff like that, and then they'll set their premiums right based on that. So those companies, they know what their risk level is, because they know like how many people will die at a certain age, right? Um,
Hmm.
so that's kind of like he's like saying in the now page 298 in the second paragraph there. He said, you have no control over how much a stock goes up, but you can, however, control the amount you lose on each trade. So you should base that amount of loss on the average mortality of your gains. This is similar to insurance company having control of how much it charges in premiums, which are a direct function of the mortality tables. So similarly, your losses are a direct function of the mortality tables of your gains, and when they tend to expire on average. Um, to make money consistently, you need a positive mathematical expectation for return. You need an edge. That's your reward risk ratio must be greater than 1 to 1 net of cost. Right? So to achieve this, your losses obviously need to be contained on average to a level lower than your gains. And then he talked about his experience. During my 30 years trading tens of thousands of stocks, I have been correct on winning stocks trades only about 50% of the time. I'm wrong as often as I'm right. However, the losses may be the same or times even greater in number. The dollar amounts, the profitable trades have been much larger than the
Hmm.
losses on average, right? So imagine being wrong as often as being right allow me to make a mass fortune. This is because I follow a very important rule. Always keep your risk at a level that is less than of your average gain. So yeah, so in regards to that, like I I um I never used to think of trading that way. Um, and after I read his book, I start to focus more on not only using stop loss, but
Hmm.
try to minimize my risk, right? Um, and it, like I'm not saying it's easy. It's definitely difficult where you set your stops. But one thing, like he said here, you should always set it based on um, kind of like your history, right? And he talks a lot about in the book, like how you should look at your recent trades. If your recent trades are, let's say, you know, you put in a trade and let's say you put in 3 4 5 trades, whatever, and you realize that, hey, they're not doing that well, right? And maybe some of them got stopped out at 5%, let's say. Then now you're losing 5%, and then the ones that are up, you look at the ones that are up, maybe they're up only 5%. Well, if you're stopping at 5% and you're only gaining 5%, that's like equal. That's exactly what he's saying. Like that's like net zero, right? So you need to have a lower risk. So maybe you need to set at 3% instead of 5% stops. Then that way, at least you can make some money from only 5% gains. You know what I'm saying? If
Hmm.
the market is like, let's say, more bullish and is trending nicely, and you're making 10%, now your risk can be higher, right? You can set a stop at 5% because you're risking 10%. You're risking 5% for a 10% reward. So that's kind of like the idea, right? That I learned from him. That you kind of have to base it on, like, especially your recent trades,
Hmm.
because the market can be bearish or bullish or kind of go sideways. So you kind of have to like adjust that risk level based on the kind of market it is. And the way to know that is by looking at your trades, right? That you did recently. If you're getting stop out like constantly, that's also another risk. Like that's another level of risk, which is maybe you shouldn't be trading right now because you're constantly getting stop out, right? Um, so those are the things that you could do. Does that make sense?
Yeah, yeah.
Yeah. Any question about that?
No, sounds good. So basically, that it's not set in stone, right? Like amount of profit or amount of stop, like percent of
Yeah,
stop.
yeah.
Yeah.
Like I mean, some people have very rigid rules, right? For example, IBD have a very rigid rule, right? 7%, 7 to 8% is their stop, and 20 to 21% is their profit. But in the market like this year, IBD style has not worked. Okay. So if you follow that strategy, like definitely you are in the big time losing year this year. Like even you have a stop at 7 or 8%, because most stocks, that's what happened. Most stocks this year break out, but they never went up 20%, right?
Yeah.
So you know, so that's a big problem. So you get stop out a lot, and then depending on how you trade, if you move your stops up or not, that's another problem, right? So, but the problem is that again, this year most breakout buying on breakouts did not work. Um, Whereas when you buy on pullback, you can go for a small gain, right? So maybe it pull back 5%, like 5%, and then it bounce from there and it make a new high. You may be up maybe like let's say 7, 8, 9, 10%. So you could risk 5% for 10% gain that way. So that's on the pullback, right? But breakout hasn't worked much at all this year. And that's one thing I've learned, that in bear markets, breakouts usually doesn't work. Like most stocks, right? We're looking at the whole market in general. Some will, of course, will work, but I'm talking about a very low percentage, right? So, so that's the hard part. So the odds are against you basically in the bear market. You know, like in the bull market, most stocks break out. I don't know what the stats is. I'm just throwing out a number in general. Maybe like 80% or 75% of them will work. But in the bear market, it's the opposite. 75% of them which break out will fail. So that's kind of like the tough part. So um, yeah. So yeah, it's not concrete, and I think if you're a beginner in the stock market, you should have concrete rules, because it just make you more disciplined. But as you get more advanced, you kind of have to like look at everything, right? You look at the market, you look at your trades, the stocks that you pick, and you kind of have to like kind of assess um, on each day, right? How the market is reacting, and then you decide based on how it reacts whether you should take more risk or less risk. Of course, what's happening recently is a very choppy market, and in a choppy market, I almost think there's no strategy that you can win, because you know unless you have a crystal ball, right? um and we'll talk about the market in general, because I feel like, um how do you say, like, there's some things that are very obvious, like 200-day, and we talked about that last week. The 200-day, was the big line, right? And also the trend line at S&P, right? The long-term trend line. Um, so you can see my screen. I just want to make sure, right?
Yes, I
Yeah.
can.
Okay.
Yes, I
So
can see.
so we have this long-term trend line, and it touched it at 4100. Exactly at 4100, it touches it. Uh, I think I have a candlestick somewhere, but I don't know if I can find it. But the candlestick like literally nicked that line, and basically uh
Mhm.
never closed at that level, right? And we talked about this last week, how it stays above the 200-day, this black line right here, and that's a good sign. And we talk about, even though like that was the thing, that was the trick, is that even though there seems like no news, what happened was Monday we saw this big downturn, right? Like as the day progressed, it got worse and worse. So everyone was watching that line, And as soon as it crossed below 200-day, people start selling. And as the day progressed, it got worse and worse. And then Tuesday was the same thing, right? Like it just because now it's more obvious. Now it's like okay, now it's even a 10-day below 10-day now, and then by Tuesday you see it dropped so fast, right? In 2 days, now it's below 21-day, the pink line right there. So in 2 days it gave up like I don't know over 3 to 3.5. I don't know how many percent roughly there. So that was a huge drop in 2 days. I think it was the biggest drop like for a while. I can't remember. It's like probably the biggest drop. Yeah, I don't know. Probably this one is pretty big too. I don't know. So that was the problem, and um, and it was a technical sell-off. There wasn't really much news, right? This is purely a technical sell-out. Because I rather sell on fundamental news, but when it's technical, it just shows that again, I don't want to jump to conclusion here, but for technical sell-off, it tends to be like I said, like a mechanical thing, you know. So there's algorithms out there that set all their stops, like for example, Monday at the 200-day line. If it drops below it, start selling, right? So I don't want to say that this is a downturn that we had, like, but yes, everyone talking about this, right? Like back every time you hit the 200-day, it fell, it comes back down all the way, right? So now everyone's saying, hey, it's going to go down like this. But I don't want to jump to that conclusion because the market, um, like it's always a psychological machine, right? The more people think it goes one way, it doesn't, right? And right now, I say that the market is really, really like almost everybody is thinking it's going to go down. And so, like Tuesday, when the CPI comes out, it could change that course. Yes, we are on a downtrend right now. In fact, I think like other than and like so, we'll look at the 3-day rule that I have. Like Wednesday, like I start buying again, right? So Monday, pretty much Monday, I was like, by Tuesday morning, I was mostly out. But Wednesday, I noticed there was some behavior of buying. So I start buying again. And then Thursday was nice, right? But then Friday, I gave it all back. So, um, you know, but so far this week is not good, right? Like if we look at the technical picture, look at Thursday, right? The only update is the lowest volume. You can see that, right? So it's definitely on the downtrend now. So I wouldn't. What I'm trying to say is I wouldn't take much risk here, right? Um, and the downtrend is pretty obvious right now. Like it's like at this curve, which is very similar to this kind of slope, right? So from that perspective, unless you're a gambler, you would you would take a risk here. But for me, I'm most likely gonna wait until the CPI data come out, and I think it will move the market again big. Last time we saw this big update, right? But this time, again, it could go either way. Either it's gonna bounce back, or it's gonna drop all the way to the 50-day, right? So it's gonna be a big move. Uh, and I like even Monday we might see another fake bounce, but really, all these are technical, right? This is not fundamentally. Right now, the market is just waiting for this CPI data. Um, so but the other question comes into play, right? So okay, so the market cares about inflation and they want to see another month of weaker CPI data will confirm that the inflation is independent on how much it goes down. They want not only does they want to know how much it go down, but how fast it is, right? So, but let's say it does go down, and okay, great, inflation is going down, which is kind of also what most people are already expecting right now. So it's not a news, right? But it at least confirm it, and that maybe that the Fed wouldn't raise rates so far next year. That's probably the biggest thing, and of course, from a growth perspective, that's a good thing because if they're not going to raise rates too much, then growth companies have a chance now to not worry about paying more interest and stuff or dealing with interest rates. and then the economy doesn't have to, worry too much. So the next question comes then, um, when will Fed start reducing rates, right? So that's the next part. And the only way it will start reducing rates is not only inflation has to keep coming down, but also the economy is in a very bad state, right? So that's why some analysts argue that, hey, even if they stop like raising rates, it doesn't mean this economy issue will go away. And inflation issue will go away. Like eventually it will, but people are still paying lots of interest. And if the economy starts to weaken, like in terms of jobs and stuff, then they will start reducing rates, right? But it's kind of like a chicken and egg, right? Because they want to make sure the inflation goes all the way back down to at least below 5%, right before they would reduce rates. So again, it depends on how fast that happens. If inflation goes down really fast, for sure by March they will do something, because by March the year-over-year numbers will be much less. Um, but we still have a few more months before that year-over-year number will deteriorate much faster. And so I feel that this week was a telltale sign. Like right now, let's put away the technical for perspective for a second, right? Because technical is pretty obvious, but from a fundamental perspective, it's a telltale sign that the market, and most analysts already talk about this, which is that most company earnings will go down in this quarter and also next quarter. But so far, the reports that came out even this month, earnings report hasn't shown, to me anyway, hasn't shown much signs of deteriorating, which is interesting. Um, Other than one sector, which like very obvious, is consumer discretionary. Like Lululemon got hit hard, right? And I kind of knew that was coming, but any consumer discretionary is getting hit hard. I think like that's XLY. Um, yeah, you can see it's kind of like it's kind of have a small uptrend here, because remember the market was up like big, and then they only went up so little, and then now they're on a downtrend. Um, so yeah, this is going to be a telltale sign too of how hard consumers are getting hit on the disposable income side. Um, so it'll be interesting to monitor this going forward, because I think this will lead, if the market were to go down, this will lead it to go down. So uh, yeah. So just to finish my thoughts again, fundamentally, um, like I think the market will not make a big move until Tuesday. I think Monday will be another, like Friday volume was really low too. So, but I think Monday might, unless there's some macro news, but other than that, there wouldn't be much movement. It would be probably stay in this range. And then the key is, you know, is it gonna go down or is it gonna go up on Tuesday, right? So that's the big movement. So for me, I would rather wait and see how the market react to. Um, the Fed will come out the next day, and they will, pretty much raise 50 points. I don't think that will change, because recent data hasn't improved, right? Like PPI data yesterday didn't improve much, and the job numbers didn't improve, like didn't get much weaker. So those two reports kind of like, you know, dampen the hopes that the Fed will cut rates anytime soon. So I don't think we will see cut rates anytime soon. The best case scenario is they might raise, now is probably like, I don't know, we can go check, but I'm pretty sure now they're just gonna raise a quarter point in February. Um, yeah, probably that's the expectation. But where is this? Let me bring it up. Yeah, so I don't think the Fed will say anything different. So for me, I don't think Wednesday will be a big mover. I think Tuesday will be the big mover. But you know, let me just jump to this first before I finish that thought about that. So 78% for 25 right now, target rate. Yeah, right now it's 375. It's going to jump 50 points. And then in February, yeah, so 425 to 450 will be, oh, okay. So right now the market still pricing in 50 50 in February, which is interesting. Yeah. So the market is still have a actually more aggressive expectation that the Fed will continue to raise 50. So that's interesting. So this is for me, I think this is good, right, for the market because that means there's no surprise on the Fed side, right? Um, so that's good because it's already priced in another 50 in February. But there's a high chance if CPI data comes down again, the Fed will probably again. It has to be drastic. It can't be just like down by zero point 0.1, right? It should be down by like 0.3 or more. Um, so it has to be more drastic, and then that will send a signal to the Fed that yeah, it is working, right? So they don't need to raise hikes. Tesla, yeah, Musk yesterday he tweeted. I don't know if you saw his tweet. He said that if Fed raise again just December, like which is this coming week, he said
Mhm.
the recession will be deep. um,
Yes.
so again, it just shows how many business people are worried with all these hikes, and we are starting to hit a threshold that most consumers may not be able to deal with, right? And the other thing I read this morning was BMO issue some warning about Canadians. A lot of them are have to when they do a mortgage they have to do a stress test of plus 2%. So with current rates at 5%, like over 5.5 probably now, plus 2, that's 7.5. Like you have to do a stress test on a mortgage at 7.5%. That's pretty high, right? So we're getting to a point where like almost nobody will afford buying a home anymore. you know, uh, that's going to be really, really bad for housing, right? And we might see huge layoffs soon because if people are not buying homes. Like a lot of related sectors, groups will be laying off. So in the new year, and that's what some people are already saying that a lot of people will be laid off come the new year. So uh, so yeah. Um, what was I gonna pull up again? I forgot now. Oh, the economic calendar. So let's look at um yeah, CPI. Uh huh. I don't see a forecast here. I don't know why. But anyhow, yeah, it's supposed to have. Okay, so previous month was zero point 0.4, but I don't know why the forecast didn't show up. Yeah. Anyhow, that was last month. Hmm. So last month was 7.8, and remember the market was expecting 8. So I'm not sure what they're expecting this time. So, but it has to drop from this number, is what I'm saying. Um, so, but these are still year-over-year numbers. So, like I said, come March, the year-over-year numbers wouldn't be that high anymore. So, yeah, all right. So yeah, coming back to my thought about the fundamentals here, um, I think the CPI could move the market if it's because based on again, I'm just basing it on last time, the market got really happy with the inflation numbers, like the CPI report weaker than expected. And if it's weaker than expected, I would assume the same thing, at least for that day. And then depending, like I really don't anticipate the Fed will say something different this time from than last time. It will be probably the same thing, right? So I guess everyone will want to hear what happened in February. And but because the market, like I said, already expect 50 basis points, I don't think anything the Fed will say will surprise people. Um, I think they're just going to go through the same course. So from that perspective, I almost feel like I'm more bullish fundamentally, just because um, there's lots of expectation that inflation is cooling down, and the Fed already approved it last time here. So now, if we get another good CPI data, and then the Fed speak again that it is confirming, I can see it breaking out. Do you know what I mean?
Yeah.
right?
Mhm.
I'm just saying, like that's my
But
guess.
then will it be a, but then what, like, will it another short rally? Because the recession is still coming, right? Like,
Well, no, that's a good point. That's a very good point. So everyone right now is expecting recession coming next year, and but no one really knows when. Do you know what I'm saying? Like a lot of people,
mhm,
like there are a lot of analysts right now. Like for example, Morgan Stanley and I think I can't remember which other big one. One of the other big ones. They're all forecasting that it could come as early as the January quarter, right?
mhm,
And that could be true. And so those are lots of guys actually, not just one or two. Like lots of analysts are saying it probably come in the first quarter. That's why like I pay very close attention to like the earnings that are being reported right now because those are including November's data, right? So like Oracle is reporting tomorrow, so on Monday, right? So like pay attention to those because I feel like this is a foreshadow, right? Even though it's not many companies, but it's a foreshadow of what's to come in January. Um, so what I'm saying is, okay, everyone's expecting the earnings to go back, but what if it doesn't? You know my point? So
mhm.
what if it doesn't, right? So and this whole year, that's what happened. Everyone from the first, I think the second quarter of this year, already saying, "Oh, every earnings gonna keep dropping." It never did. Yes, it's coming down slowly, but it's not the drastic drop that everyone was expecting. And now the same behavior or same psychology is happening again. Everyone expected January quarter is gonna be so bad, like drop 10%, but it might not. Is what I'm trying to say, right?
Mhm,
So
mhm.
so with that like okay, so I read the RBC one. Their forecast is that recession will arrive sometime around mid next year. That's what their forecast is saying. I didn't read the whole newsletter. I have to go back and read it. But it's their global forecast for the whole world for next year. But they did say that U.S. probably will enter recession sometime mid-year. Um, which is I think that's where it'll as early as mid-year, right? So meaning like it could be later. It could be like third quarter or fourth quarter even. So, and I think I kind of align myself more around that time frame. I don't think recession will come in the first quarter. Again, the earnings have to come down really fast for it to happen. And and we look at the job numbers, it hasn't come down, and that's another sign, right? That yes, a lot of big tech layoffs everywhere, but the job but in general most sectors are still hiring. And even last job report we saw like the hospitality group hiring the most. And so it's kind of like there's an imbalance, right? Like a lot of the high tech jobs you know was highly demanded. Now it's kind of just slowing down a little bit. But it's not to the point where it's a crash, right? Like, oh, nobody can find a tech job. So it's just that everyone won't, anyone who get laid off, they have to settle for a lower paying job probably, right? Uh, that's the difference. And so anyhow, that's just my take on it right now. Like it could get worse, obviously. So, but I don't know. I just kind of feel like because there's such an anticipation, just like back in like June, right? Everyone's saying, hey, the second quarter is gonna be so bad, and then it never did. Not the earnings was quite better than expected. So I feel like that could happen again this time. But with that being said, um, I am bearish definitely long term, right? Um, I don't know if this is gonna start the third leg down. Everybody wants to see that. A lot of growth, like big growth investors, they want to see this third leg down because they feel like another leg down will take out a lot of people, and then finally maybe we can start a bull rally, right? But I don't know, man. I don't want to. Again, I want to stay open minded. I feel like um, fundamentally, I feel like things have changed, right? I feel like this jump right here um, says that CPI data is good. If we get another good one, it's a back-to-back number, more analysts will be there's a lot of analysts that think inflation won't come down. So that's why they're so bearish. But
Mm-hmm.
inflation comes down fast, then we are more along the camp of like Cathy Woods and Tom Lee, right? Because that they're the only two bulls out there, right? They're the only ones that are like more advocate toward that. Hey, inflation will come down fast. And remember, Professor Seagal also said that he believes that it's just a matter of time. It's the real numbers already showing it coming down fast, but those numbers that the CPI uses are more lagging. So so again, if you follow that camp and you feel that they're correct, and I think somewhat they're correct. Again, this CPI second CPI this one that's coming is going to be very crucial because it will kind of confirm if we see two back to back weak CPI numbers and coming down fast. Um, it will confirm that what Fed did is working, right? Even though, like Professor Seagal already said, the real numbers already show that. So it's just that the CPI is a little bit lagged, so that's why it won't show up. He said that in January, that's when you will see the big drop, right? But even going forward right now, it's still a little bit, like, go down by 0.2, 0.3. But comes January, that's when you start to see the big numbers because it will take into account like a lot of the things that have dropped. Um, and so from that perspective, again, I don't know if it's right, but if he's right, and he's been right all along since the about the inflation stuff. From even back in 2021, he was the first guy who said, "Hey, there's huge inflation coming," and no one listened to him. And now he's saying, "Hey, it's dropping like a rock." And so, uh, yeah, um, yeah. So that's I hope that's I hope the CPI will show. This is my bullish take right now. Um, I hope the CPI data will prove itself, and most analysts will then consider, oh wow, inflation is really coming down, and then the Fed might acknowledge that the next day and say, hey, maybe they have reached what they call the restriction level. Restriction level meaning like uh, they feel like that level is the level where inflation will start to come down without doing anything, right? And if they say that, you're gonna have two back-to-back bullish day. Do you understand what I'm saying?
Like
So
last time, big jump.
yeah, not but it won't be just one day, right? It'll be 2 days, because if the Fed acknowledge it and they have reached the restriction level, which means they won't raise rates no more.
Mm-hmm.
I don't know if they will say that, but I'm just saying it could happen. It could be a surprise, and we're gonna see two back-to-back days, and this rally will continue. Like again, this time maybe, if that happens, honestly, we will see a big jump, right? Like a 3-4% day, another 3-4% day, two big days, and we will be above this trend line. You know,
Okay.
right? That could happen. That's my bullish take. Okay.
Mm-hmm.
Um. Okay, but the more conservative view is most likely CPI will come down a little bit. Market might react initially positive, but then they may start to think about, hey, recession is coming, right? Again, um, I'm not that like I'm not saying a recession is not coming. I just don't think it's gonna come that fast. But that's just my view. But let's just take the more common route, which is most people think recession is coming early next year. Then
Mm-hmm.
then it'll probably show up a little bit, and then maybe we even hit the 200-day line again, and then it might start to fall again. You know what I'm saying?
Mm-hmm.
So so that's the more conservative view, and that's why a lot of people say, uh, like I don't know, like right now if I draw this trend line, this is a very steep bearish trend line, and I'm not sure if that will happen because right now it's too obvious, right? A lot of people are shorting this market right now, and they're saying, "Oh, it's going to drop all the way to at least 50 days." That's the obvious thing to see right now. And for me, and we'll look at stocks in a second. I feel like if that were to happen, I would. I'm not saying it won't happen. I'm just saying if that were to happen, um,
Mm-hmm.
it to me, I felt like the leading stocks would have dropped a lot more this week. And I'm not saying they didn't drop. I'm just saying a lot of them, at least about half of them or something, are still holding up. So I was expecting more like everything will fall apart, but they did a lot. Half of them did fall apart. So I'm not saying, but I was expecting more bearish, right? View on the leading stocks, but not all of them are bearish. So that's why I'm like, that's interesting. So you know, um, because really that's what's going to happen if the leading stocks start falling apart, and most of them are falling apart. Then yeah, I believe this trend will continue. But because most of them, but just because they haven't, like let's say the 50% that I was saying haven't fall apart yet, doesn't mean they won't fall apart. It's just it hasn't happened yet. So I'm gonna stick with that for now until I see that happening. But I'm obviously you don't want to be like 100% in right now because there's more risk than reward, right? So, um, but but at the same time, I don't want to be fully out right now because for me, I feel like it's a 50-50. From this level, like right now, you can see there's this really strong support line right here on S&P, right? And which is good. Like for me, this is like a bullish pattern, right? Because we have this strong uptrend right here, and it's giving back half, exactly half,
Yeah.
right? So it hasn't fall back below the half level, which is the last. It's funny, exactly the last time when the CPI data came out. And it sucks for most people because it means that it hasn't gone much very far since the last time CPI data came out. So it's been exactly a month since that, and now we're back to that same level. um, so, but this market is definitely tricky, and that's why, like that bullish view I mentioned, will shock everybody, right? If that happens, CPI data come out weaker than expected, and then Fed comes out and acknowledge it, we will see a back-to-back bullish day, and maybe even break out on this long-term trend line, right? That's what we need. That's what we need for that to happen. But that's a very, I don't know. I give it like 20% chance, 25% chance maybe. Um, the 75, the other 75 chance is probably, like I said, you get like the worst case scenario is you get worse CPI number. Then we're gonna go straight down. Okay. But I really hope that doesn't happen because I trust Professor Siegel. uh, so um, but like I said, if it's a little bit weaker, the market might jump initially. Um, like I say, even as high as back to this 200-day line for one day, and then the Fed comes out and is like, oh, and that's what people are. This is why the market was weak this week, because last week we were like, oh, why would the market drop, right? But everyone's anticipating this 200-day line, so it fell below it technically, and then people now starting to talk about, oh, like what could happen next, and everyone says the same thing: recession, recession, recession.
Yeah.
So if everyone like this is the thing I'm saying, right? The market is very psychological. If everyone thinks the same thing, it's not gonna happen. And that's just like exactly like last week when the market fooled everybody saying, hey, look, it's holding up at 200-day. There's a high chance of breaking through. Well, it didn't happen.
Yes.
And right now, again, it's very obvious that there's a slope trend line going down, and everyone's saying, hey, it's gonna crash. So everyone's shorting the market. So it could, like I said, it's very psychological in the market, and it could fool everybody. Um, you know, but it could, like, obviously, I'm not saying this couldn't happen. It could happen this week. This week, it could be a big down week, and then the week after, most likely, let's just say it's oversold, then we probably will have a small rebound off this 50-day, and then we will have some sort of small Santa rally before the new year, and it'll close, somewhere around this level below in the bottom half range, right? So either, and so that's why a lot of people talk about the 3,900 level, which is exactly this line right here. If the market closed below 3,900, this level, there's a lot of technical trading algo around that line. So that's why I said if we cross this line, yeah, we're gonna see a huge sell because everyone set their stops around that level. So a lot of algo trading will start selling once it hit 3,900. And this week we were able to keep hold. Look at even the last 4 days, right? How close you got to it.
Yeah.
And then Friday 39.33. Um, yeah, this is the sand. This is the line in the sand that everyone's drawing. We fell 4,000. That's why when I text you, I said we felt if we fall 4,000, it's gonna keep dropping, and it did, right? So, but now we need to find support at 900 because that's the last month's trend line right there, the whole month. So, oops, yeah. So that's last month's trend line. Um, so those are the few scenarios that could happen. Obviously, I'm hoping for the bullish bill, which will be the biggest shocker. Um, but it's that's a small chance of that. The more likely chance is that it's going to bounce on a weaker CPI report. Again, test this 200-day one more time, and then it finally break down. Then there's no center rally. It's possible. I don't want to say this. There's a slight chance that it could be range bound too, all the way till the end of the year, between this line and this line. So, but I find that hard. Like it's possible, right? But I don't know. I find that hard. I maybe because the volume is going to start to dwindle after this week. So it's possible that I might not. It might just go sideways. But let's look at other index for now. Let's see how they're doing. Yeah. See, Dow it fell apart 10-day, and then see it's trying to hold up 21. But look at what happened Friday. 21-day broken. So that's the bad thing, right? Um, yeah. Let's put it this way. If Tuesday CPI comes out, and I'm ignoring Monday. Like Monday, something could happen. Like it could even go down further because people are so afraid and they might sell off that day. But Tuesday is the key because Tuesday, if it doesn't bounce at all or like whatever, if it doesn't even bounce at all, yeah, it's definitely a big like draw a line in the sand. You gotta protect yourself. That's when 3,900 on the S&P will be broken for sure, and that's where everything will get triggered. And then it's gonna be a big down day like this. Um, yeah. So that's Dow. Looks very weak because it was so strong for a long time, right? 10
Yeah.
day. Look at this green line, and then it broke the green line here. It closed below it, right? And then now it's trying to stay above 21 day, and then Friday it fell below again, which is really weak. And then at the end of the day, yesterday, I don't know what happened. It just fell off again. So a lot of people want to sell ahead of the CPI report. So that's a good thing because that means that people are really fearful of the CPI, and it could be a surprise, a bullish surprise, right? That's why I said, um, don't discount that. Like it could happen, but at the same time, we know it's on the downtrend. Nasdaq. Let's go back to Nasdaq. Yeah, so this for Nasdaq is the 50-day line. Everyone's talking about that, right?
Mhm.
So very similar. Again, you can see it hold above that level. You know, again, we have this big jump right here. It's giving back about halfway. Again, same thing, almost halfway, right? So, so to me, this is like I said, for me, I feel like this pattern is a bullish action, right? Because um, it went up from this low and then it only gave back half, just like in the stock, right? It went up big and then it gave back half, and that's to me that's like the ratio, right? Where most you know, in terms of like good behavior. Um, so it's like almost like building a base right now, right? It's building a base right here, and then the idea is that it will break out, right? So we'll see, but we need a catalyst for that, and so this Tuesday and Wednesday would be a possible catalyst for move, of course, moving the market either direction. But like I said, for it to break out, it needs something, and the markets need something. Yeah. So that's in general about the index. Any question on that?
No, yeah, sounds good.
We're gonna jump to XLE for a second because I feel like you know this is a big talk, right? Always keep dropping. Like if you look at USO, so oil price keep dropping this week. It's a big drop. A lot of oil and gas stocks now starting to get hammered. Um, for example, so let's just come back to XLE for a second. And then now we can see that this is the energy index. Look at that. It finally fall apart, right? And not only that, look at this. It cut 50-day so clean. This is something like this is like a picture perfect cut. Like um okay, so what happened? It cut it. It didn't even try to come back to that line, like close at that line. The next day, it tried to, go to that line, try to go above it. It didn't even, it just nick it and then come back all the way down. And then same thing again, the third day, same thing. Look, it went above it slightly just to fool everybody. And look, it closed it down. Like it tried 2 times after that first day cut. And then now it's starting to fall apart. So this is like almost like a textbook type of, fall. And Um, and now you can see the 10-day. At some point, it's going to bounce hard because it's just dropping too fast now, right? So here's a 10-day slope line, and you can see it's heading towards the 200-day, and it will intersect somewhere around here. Uh, yeah. So, but it probably bounce somewhere before that. It's going to keep dropping and then bounce. Like I honestly, there was a let me just jump to it. There was a 1 second. What is it? There's okay, so let me just find it. Let me, oil gap. Okay, let me look at that article or tweet here. So this guy, he kind of predicted that um the so the white line is the stock index for energy, and the oil price WTI is the blue line. And so what happened was the oil price started to drop, but the oil stocks hasn't dropped that much. But what he's been predict and this again this he predicted this a week ago, like when the stock index XLE was more higher, and he said that the because the oil price dropped so much, the oil stock's gonna drop more because like going forward, like it has to catch up to this oil price. And so he was right. So this week a lot of oil stocks got hit hard, right? For example, what's one stock I used to own? Hell, look at this, right? It's dropping really fast, right? From 40 to now 33. And look at it. This is bad, right? Broke 200-day line. That's the long-term trend line. Not only did it break 50, it break 200. Like clean cut, no rebound whatsoever. That's again, this is like the art form of technical, inspection. It's like look at this. It just couldn't even try to come back to 200-day. So the next 2 days will probably try to nick it again, and then before falling further. Uh, that's my guess, right? Um, but the fundamental story about energy is very interesting, right? Because we've been talking about it how um, I think one day I can't remember which day there was even some pipeline issue somewhere, and then it bounced, and then after open, very quickly it come back down, and it just shows that the story is no longer about China open economy or this pipeline issue. When you see those issues that will hurt the supply and the oil price still won't jump, there's something wrong there, right? It's more of a now the market cares more about the future that the world might be entering uh, recession, right? Um, so now the story becomes more less of a supply demand issue, more of a recession issue. And that's the same with the stock market too, I feel, right? That's why so many analysts are bearish right now. But that's the thing. If every analyst is bearish, it almost feels like the bottom is near, So,
Yeah.
but for oil, like I said, Kramer, he did say it will most likely go below 70, somewhere between 65 and 70 before it bottoms. So and I think we are on the track, right? I think right now it's around 70. I can't remember where it closed. Around 71 or 72. Um, so we'll go look at oil. 71, yeah. So, um, so like it's high likely, right? Now that you can see every oil stocks have cut through their 200-day, most likely it will go down a little bit more, and then it'll probably bounce. So that's where my take on energy is. Again, I don't know exactly what the price of oil will be before it bottom, but right now what this guy is saying is that it will catch up. So meaning like the oil stock will drop even faster right now, just to catch up to this oil price drop. Because for a while it was holding on, and now it has given up, right? So,
Mhm.
so a lot of people will, like I say, be forced to sell technically if they're using algorithm as it continue to drop. So, uh, so that's the bad thing about commodities.
Also,
Um,
it's said usually, like even Puru said it, right? That guy.
which one?
Basically, at the late end of cycle, like just before recession, basically because demand goes down and oil, basically that's why oil gets affected.
Yeah, that's right. That's right. So yeah, I don't know, like this. Yeah, you could like totally right. Right now, there's so much talk about recession, and that talk is hurting the oil price. Um, but I don't know, man. There may be a bigger force behind the scene that I don't understand. So because as I say, like this is like almost like if we keep going down and oil price keep dropping, even below 65, let's say, then yeah, then I believe it. Recession is definitely here. But we'll see. Like I don't know. Like, I still feel like um, um, the recession may not come so soon, but that's just a few. I don't know. Maybe I'm probably totally out of the woods. Maybe every analyst is correct, and that we are going to have a third leg down. We're going to have a recession in the first quarter and stuff like that. But I say I like to see evidence, right? I want to see, hey, are the company earnings showing much weaker demand, right? Things like that. I want to see that. Um, so so that's why I feel like this market, I hate to say that word, that it may be range bound. I don't know. Like, but I feel like this Tuesday, Wednesday will kind of have to make a decision which way it go. I feel like it has to because I've never seen a range bound for because after this, there's no more fundamental news, right? It's gonna be holidays, and then you wait till New Year. So could it go another 2 weeks like bouncing in this range? Yeah, it's possible. And then New Year start to fall apart because that's really when every company will start to even lay off more. Maybe I don't know. But we haven't seen this sideways range for this long in a long time. Yeah, look, I don't like the right here is kind of range bound too. It's a
Yeah.
bigger range, but I feel like this one, yeah, this is the range right here, and then now we have this slightly smaller range, and yeah, we'll see. I did notice Nasdaq didn't drop that much on some stocks on Friday. Let me see. So if I go to like SMH, okay, it did drop near the end of the day, 0.82. Tan Solar, 0.5. And health stocks, surprisingly, got hit hard on Friday, 2%. So I don't know. It's kind of weird. Let's just jump to those sectors real quick. So SMH, it's interesting. See, this is what I'm telling you. SMH actually showed strong technical strength. Like it's not at the bottom of the range. This is the range, right? It's not near the bottom. Whereas, we saw that this is a higher high and a higher low. But the index didn't show that. The index made a low, a lower low, um, and a lower high too. So interesting, right? So SMH is actually showing strength right now, and it's near this 200-day line. So, like I said, I would pay attention. Like I noticed this. Yes, it did close at the bottom, but look at how small that range is on Friday compared to Thursday, right? So there's a high chance it will break out. High chance. Like when I start, like when I look at this chart, like this here's the pendant almost.
Mm-hmm.
So again, it's gonna make a decision, but this is more strength than the index. 10, let me see. Okay, so 10 is different. You see, we look at the range here. It's at the bottom of the range, right? This is at the bottom half of the range. So this is weaker than SMH and IBB, which is the biotech. And we look at this range, same thing. This is at the bottom range right now. So um, yeah, so that's kind of where the those sectors are. Um, yeah, interesting. So yeah, surprisingly, like I said, the semi stocks are slightly stronger. Um, yeah, let's jump to stocks right now. Do you have anything else before we jump to stocks?
No, no, let's go ahead. Yeah.
Yeah. So we're gonna jump right here. So the first two here are the Chinese stock, Futu and PDD. They're still pretty strong. Like PDD has a higher low on Friday. Futu has a outside reversal. Um, so here you go, outside reversal day. Usually this is not good,
Mm-hmm.
but um, yeah, but it's not 100% conclusive because it's still near the highs, right? So and it's way above the 10-day. It could drop back to the 10-day and then bounce. So it's hard to say. PDD, look at this higher low, right? So
Mm-hmm.
again, it only gave back half of Thursday's gain. This is a really strong uptrend. Holy cow! So those two stocks are still leading the whole market, at least on my list. And then we have tech stock, right? ALGM. ALGM was really strong too. Look at it. Friday, it gave up like it closed near the previous day's close. That's pretty good, despite a down day. So this is a this stock Jim Ropel he really sell it on this list this week's member podcast. He said this stock have potential. uh, but yeah, I don't like, and he said that many people don't know this name. So yeah, so this could be a leading semiconductor type of company. Um, yeah, it wasn't even on my radar until probably a few weeks ago. So yeah, it has climbed a lot since a few weeks ago. So it's still on this strong trend line. This is the only pullback right here that it has
Mm-hmm.
given for anyone to buy on pullback. Well, there's one here too, a really short one, 2-day pullback. But this one is more of the pullback where most people can add. So that one is now number three. Yeah, I remember the start. It was like from behind, came all the way now to the top. SMCI, unfortunately, SMCI has fallen apart. Look at this,
Mm-hmm.
right? Like
Yeah.
it tried Thursday on a good day. On a good day Thursday, it couldn't close above 10-day. That's a big sign. Yeah,
Mm-hmm.
that's a big sign. This thing might fall apart. I don't know why though, but it really shows lots of selling right now. So unfortunately, that one has fallen apart. So pretty much all the reds is starting to show signs of weakness. FICO, um, this one I think is still holding up. So again, this is an inside day, um, which is good. It didn't make a new low on Friday, so that's a good sign from that perspective. Um, I'll skip AES because I don't follow that one because it's more thinly traded. Aeon, this is in building in heating. This one, look at this stock is so nice, right? Holding up the 21-day line. It's like building this like long-term cup with handle right now, and
Mm-hmm.
this is the trigger point. So this one, look at this RS rating at new high, really strong.
Mm-hmm.
Let's look at the big picture here. Wow, look at this cup.
Oh wow.
Yeah,
Wow. Wow.
right. So this breaks out will be strong because
Mm-hmm.
it's just so. So one of the psychology, the cup psychology is that like even though this is a very deep cut, usually you don't want that because um it could be a but now it's building a long handle like we're talking about like multi-week handle, right?
Mm-hmm.
So that's okay because it means that anyone who like bought here, lost money, right, as it goes down, those guys are trying to sell that right now because it's coming back. So whoever hasn't sold, they say, hey, let me get my money back. And then they did, and then say, hey, I'm going to sell now, right? And then most of those people who are more weaker, they will have sold here, and then even here, as it comes back a little bit. So here it has a double test here on the bottom, and then now it comes back up really fast. And now we have all these sellers at this top who hasn't sold yet and say, hey, it's been a long time, it's been a year. Now I reached this level, I want to get my money back. So as soon as those guys are selling, all those guys sell out, then it's gonna break out. Uh, Look at this volume, pretty good. All the red volume, and look at the blue volume, right, sticking out, right? All this blue volume is sticking out. See, so that's a good sign. So the sellers are starting to diminish, and then the buyers are showing up, right? So that's why it's so strong. It's acting so strong. So Aeon is it's a good potential, I think, right there. LSCC, another cheap stock. This one pretty good too. Yeah, it's obeying the 10-day pretty well. This one day came down, but the next day it came back up and then came back up, and then inside day. So still look good, LSCC.
Mhm.
Another chip stock. Lots of chip stock, surprisingly. I'll jump the clock here. That's another chip stock. Um, this one just show up on my list, and it's showing good progress. See, holding the 10-day really strong. Look at that. Not one day close below it yet. So, and this is a big cap, 55 billion. So, yeah. So I feel like there's okay. So the volume has been slightly weak on the weekly chart. Let's see if anything pop up on the daily. So there's only one. There's one here. Yeah. But despite all these selling days, it's still holding up. The price level, like the price. So if you have to choose price or volume, always choose price. You know what I mean? Because price is more important, right? Volume is second indicator after price. So if you can't figure out from the price, then you look at volume, right? Um, and if you have both, that's the best indicator. So yeah, so right now it's kind of going upward slowly. And like I said, you have to kind of look at the environment. So we have a big down week, but what did this stock do? It actually going up, right? So slowly, not fast, but it's not down. That's the key. Most stocks are going down. So if we look at the other one, Pi, this one has kind of fallen apart too. Look at the 10-day. It couldn't close above 10-day now for how many sessions?
Yeah.
Right? It just keep hitting it, come back down. Keep hitting it, come back down. So that's falling apart. So it's right here, Pi right here. WNC falling apart. See below 21 day now. As soon as it go below 21 day, it gets scary because the gap between 21 and 50 is big, right?
Yes.
And yeah, talking about that, let me jump to CHX because this was a stock I really like for the oil and gas sector. And look at it. This is what I'm talking about. Once it fall below 21 day, look at how fast it takes. Only a few sessions to hit 50.
Mm.
You know, but obviously we know what happened to oil and gas this week. So um, so yeah, I just want to show that example because that's the scary part. So that's why um, if Tuesday CPI data is bad, we could have a big drop, and most of these stocks will drop big. That's the scary part. That's why I don't want to take too much risk, right? Like going into it. I rather buy at higher price because that's more safer, you know, because it's more likely will go higher. Whereas like, if it goes down, it go down big, and you're gonna take a lot of risk. And especially the data get released before, you know, before the market opens, you really have no chance to sell, right? So if it drop 3%
Yes.
pre-market, your stock will be down 3 to 5%, something like that. So
So
um,
basically, you will wait for the actual news.
yeah, it's better
And
that way. Unless, like I say, unless the only way I will like hold a stock to those meetings is unless like I have a very strong stock and I'm already up, right? And if I'm already up like you can take a risk there, you know. And you have a very strong stock and you're up on your portfolio on that stock, then yeah, you can take a risk. But even then, I would, like I would like depend, how much you want to risk too, right? Like if your whole portfolio, if you are, I would say like going into Tuesday, if you're still in the market, like based on the current condition, because you have to trade based on current condition, not the future, right? You don't know what's going to happen in the future. But based on current condition, you should be like 30% and around there, 30 to 40. If you were aggressive, maybe 50% in, but you shouldn't be like near 100%, right? For sure. Uh,
Mhm.
because the market condition has deteriorated a lot in the last week. That's why. Um, so, like even this stock is very strong, and it got hit Thursday and Friday, which is weird, but it's still holding above 10 days. You see that? So,
Mhm.
you know, but it is again deteriorating very fast. So again, this is like, if you're still holding it, that's the line you will draw. Um, but it is deteriorating. TGLS, same thing. This one also at the top, it was holding up very strong, and then now it's still holding above 10 days. See, all these stocks are still holding above 10 days, but it has weakened. It has weakened considerably. Um, but doesn't mean it won't move again if the market moves. So, but these ones are the ones at the top of the path. So they're still holding above 10 day. As we go down the line here, more and more are below the 10-day now. So RMBS, another chip stock, this one also start to fall. I guess, okay, this one, like, it fall right here. Thursday, it make a rebound, Wednesday and Thursday. So that's interesting. And then Friday, again, it dropped back to the 10-day. So this one is still good, holding above 10-day. But again, weekend, right? TRMD, okay, this is oil and gas, so it probably, yeah. So this one, again, 10 days. So all these top stocks are holding near the 10-day. Very interesting. Um, BA, I believe this one, yeah, look at this. This is interesting. Look, you know, I know it's such a subtle um, thing. Like how it closed Thursday, Friday near the same level. But look at it. The 10-day is like it's hard for you to see probably. But the 10-day is below that. And both days, even though it dropped, it didn't touch it. That's impressive. I know it's such a small thing, but to me it's impressive. So yeah. I like BA. There's a news this week. I think they came out with some forecast that they're going to do better next year. So yeah, I would watch this stock. This one has a huge potential. BA. Yeah, Cradle. I think that one also starting. Yeah, so almost of these stocks are surprisingly not that bad. They're still above 10-day. Um, MYE. This one is containers packaging. Yeah, this is a nice uptrend. Still holding above 10-day. So so one thing I've noticed, right? Whenever they cross below 10-day, the next day is super important. It needs to bounce back above right away, right? So this one's did that. So most stocks should do that. Uh, Anytime you cross a moving average, the next day it should try to cross back above. If it doesn't, something is wrong, you know. So even if you didn't sell below the like when it closed below 10-day the first time, um, if the next day it still wouldn't close above it, that's probably your best signal to get out. Um, so we are TV. Okay, so this one is still on a nice uptrend. Um, yeah, this one is a very interesting pattern. It's very consistent, very interesting. It's a paper products.
Mhm.
This is Gil.
Yep.
Look at this, still going up slowly. Interesting. Yeah, very strong. Halo, MEDP. I think someone did. Yeah, Halo is a very strong fundamental stock. So it's still riding the 10-day. Um, yeah, MEDP, same thing. I think they have a strong. This one has started to fall apart a little bit. PFGC. This name comes up a lot. I always forget this one. Wholesale food. Yeah, interesting. I think this is the only staple stock that's doing so well. It's very strong. Okay, but this week it kind of drifts slightly downward. But it's still above the 10-day. That's still impressive. Um, SLVM. This one is again containers. It's funny all the containers are doing so well. Look at this. This breakout. Nice. This is a very nice breakout. Oh, this is an IPO stock. Wow. Yeah. Nice stock. Yeah, this one is nice. SLVM. TRN. This one I think I just added it this week. Transportation equipment. Yeah. Okay, this one below 10-day. Interesting. Right. 5 FN Flex. I think Flex is another container. Oh, this is contract manufacturing. Yeah, this one did really well. Look at that. Wow.
Wow.
Right? Hit new high. So very strong. Flex. In phase.
Yeah, ENPH is interesting.
Yeah, you know how remember last week we say, oh, it broke out, right?
Hmm.
And then so many people are looking at this stock and then it fell apart.
Yeah.
Yeah, it's this but the overall trend is good. Okay. The overall trend is still like above near the 10-day. See that even on Thursday, Friday is still or
Yeah,
Friday,
bounce.
yeah, it bounced off 10 days. So it's still like overall it's good still, but it's just worry. Everyone's saying the same thing, right? Like some of the growth guys, they don't even trade this stock anymore. It's like just too volatile. At
Hmm.
some point, it's gonna move. But how many times are you gonna get stop out before it moves, right? That's the problem.
Yes.
Hmm. And I feel like solar stocks have been weakened a lot, so that's another problem. Um, well, this is Fabrinet, still above 10-day. Like this is you have to understand. I know all the stocks that we see, a lot of them are holding at the 10-day. We have to understand that that is very impressive, right? Because the index already broken down 4 days below the 10-day, and
Mhm.
these top stocks here are still above the 10-day. So that's very impressive. I'm just letting you know. Like the moment the market turn again or rebound, this stock's gonna fly. You know, that's what leaders do. Is they always relatively performing stronger? Is the index go down, but they're trying to hold up, right? That's why I haven't given up. I'm just telling you, this is the reason that I said earlier. I haven't given up on this market yet, despite
Mhm.
so many people that saying, "Hey, it's gonna go down hard now," right? Yes, some
Mhm.
of them have, and that's why I'm talking about those as well. But there's a lot that hasn't, which is interesting, you know. So, um, you know, so you also have to understand that maybe, that also tells you that which stocks are stronger too, because as the institutions are selling into this, weakness, which ones are they selling more, right? So
Mhm.
that also gives you a sign of which one. That's why in the weak market, look for those ones that are holding up because those are gonna bounce hard as soon as there's a bounce here. Um, yeah. This one, okay, so this one, see, it fell below the 10-day now, but the 21 day is right there. Aqua pollution control. So a lot of those these industrial stocks are doing pretty good, surprisingly. Still, like it's been leading the market the last since this whole rally started. Another chip stock, MCHP. Yeah, see, holding at the 10-day. Like I'm not saying they can't fall below the 10-day. I'm just saying relatively they have been doing better than the index, right? Which is, uh, see, like look at this: 6 days down days, 5 days down days, only 2 up days, and it's still holding at the 10-day. That's pretty impressive.
Mhm.
Um, yeah, but but of course, there's always some stocks that have given up. But and remember, these are the top of the pack. So So this one has given up 10 days slightly here. But the thing is, you see, even this stock, right, CPRX, it give like this is a biotech stock. It give went below 10-day, but it wasn't like a crash. You know what I mean?
Mm-hmm.
That's what like when you see those crash, like a big down day, as it falls through a short-term moving average, like 10-day or 21-day. That's when you know something is wrong in the market. You know, but we're not seeing that. Like like I would expect something like this. But it
Mm-hmm.
could happen. I'm not saying it will happen, but it just hasn't happened yet. So, like if we go back to hand face, like see, like this one big down day, dude, that's a nasty day. Cut below 10-day. It did close at 21-day, so that's then the next day it has to bounce right away. It did, and then so it recovered half of it. You know, so that's good, but you know, but most stocks hasn't seen that kind of drop yet. So IMCR, this is another biotech stock. Look at this. Holding so strong. Like this is impressive. This is
Mm-hmm.
to me it's impressive. Um, Titan. So this is the retail wholesale building products. Right, look at this. It's holding strong. So there's a big drop here. Um, yeah, but right now it's holding at this 10-day. So this is a good classic example of like um, don't buy too far away from the 10-day. Eventually, most stocks come back to 10-day, right?
Mm-hmm.
So sometimes we get into the FOMO, right? It's like, oh,
Yeah.
this great stock breakout, and we miss it. Don't try like if you buy like earlier in the day, you're good, okay. But don't try to buy like um at the top here because you're gonna get knocked out for sure. Because most stocks will come back to 10-day. If you miss it, you miss it. Don't worry about it. It'll come back.
Mm-hmm.
That's and if it does break out, you have to be there when it breaks out. Like otherwise, you're gonna be buying at a much higher price, and you can get shaken out. So that's something that I learned not to do. Is sometimes it's hard because like you have this FOMO, right? And
Mm-hmm.
so, but always remember that um like if you do buy it, let's say you have to be prepared, you have to be ready. It's like the day before, like you kind of know it's if it happens, you have alert stuff like that set up, and then as soon as it breaks out in the morning, you have to be there. Um,
Mm-hmm.
so this one stock GFS surprisingly did really well this week. Look at this, right? Um, yeah, this is very tight action, very tight. I really like this chart. And even though I fall below 10, 21-day recently, but this week, surprisingly, is one of the strongest stocks. And you can see the RS lines going upward. So very interesting. But of course, a lot of people look at this stock. It hasn't gone anywhere. But this is one of those stocks I think as soon as a bull market comes, it's going to fly. This
Mm-hmm.
is an IPO, right? So I think this one has potential too. Uh, JCI, Johnson Control, another industrial stock. So this one, look at this. Like sometimes looking at weekly chart is important because one of the things that I realized even this week is as bad as the market, like because it dropped 4 or 5 days, and but when you look at a weekly chart on this stock, it looks like nothing. It looks like just a little blip on a bigger like change in direction, right? Like we already went through this downturn, we right now going through this upturn, and that's what I realized, right? Like if we look at all these stocks that we just look at, like GFS, you see we have this big downturn, go up.
Mm-hmm.
Now we are making like much higher lows, and higher highs now, right?
Yeah.
So like I don't want to jump to conclusion, but like I said, these stocks are actually, you know, on a bull trend now at the stock level. Do you know what I'm saying? So, if like like we want to take a step back because if you want to know where the direction is heading, this is telling me that at least for these stocks, again, this is a stock picking market, and so these stocks are already trending in like a bull. Do you know what I'm saying? In the long term. But in the short term, you're gonna see lots of gyration. But the gyrations are not too bad, right? You know, if you trade in short term, yes, you're gonna feel like you get shaken up, stuff like that. But in the longer term, all these stocks are on a bull trend. It's starting a bull trend, is what I'm trying to say, right? So, um, so again, depending on your, your style of trading, you may, um, like even ENPH, right? It's now on the uptrend now. It's not a nice uptrend, meaning like it's not strong, but it is on the uptrend. You know what I'm saying? So, yeah. So, so that's a way to look at it from a longer term perspective too. Like AZN, look at this. This is a bull trend. Look at that,
Mhm.
right? So, um, yeah. So here, run is a solo stock, and this one has fallen. See, this one fallen below 10 day.
Mhm.
Um, but we look at the weekly chart. Okay, it's okay. It's not the best. It's okay because this is only the first base. So, but I would definitely look at stocks that have already have a higher base. If you want to invest long term, like if I go back to M phase, right? You already have this long base here, and then now you're forming this tighter base, right?
Mhm.
So this is like what we call base on base.
Mhm.
So longer term, it probably safe. Like any base on base are probably safe for the long term because it already tested so many times, right? If we go to AZN, this is still first base. Okay. So yeah, that's another way of looking at it if you want to invest like more longer term, you know. Array, this is another solar star. Yeah, see, this is like a base on base now, right? So this is base on top of this base. So,
Mhm.
but this one is volatile because it's a smaller price stock. So, but longer term, you can see the base on base pattern, which is means that it's already been tested twice now. URI, this one, I see a lot of attention on this stock recently. Commercial service leasing. So you see, starting to, so this is the base here, and then another base, smaller base. So it's again a base on base pattern. But if you look at the big base here, then it's still working on the main base. But this one's doesn't come up. This one is pretty strong from the last uptrend too. So we already talked about CHS. Maybe is another oil and gas. Caterpillar. A lot of attention also on Caterpillar lately. Um, this is a big cap stock, right? But it doesn't move like a big cap. It moves like a growth stock. So it's almost near breakout line. Very interesting. Look at this. Even go far as back to this right here. So if it breaks out, it's going to be big. But right now it's acting a little bit weak, right? So I don't like this. Like I say, it's just, once it fall below 21 days, like this is clean cut fall fell. Excuse me. This is like not good, right? Yeah. But it didn't even try to come back to the 21 day. So when I see those, I definitely don't want to pick the bottom. uh, Harmony and GMAP, those are biotech stock. Yeah, still holding pretty tight here. This one's, see, you can see base, base. So, um, it's a very choppy stock, there's no doubt. But this is also IPO, lots of potential. Look at this earnings, triple digits. Yeah, this one. But like I said, it's just yeah, it's making new high, right? So there's potential. GMAP. Okay, so this is this really big base here. It's, it's almost coming out now soon. So look at recent growth, triple digit. So these are companies. So not many biotechs make money, but these ones do, right? So that's why look at this object. Wow.
Wow.
and it's still holding at the 10-day. That's very again. This is very impressive. Like despite a down week, they are still holding above the 10-day. Like that's this is the kind of stuff that like as you know as soon as there's a good day like a good news or something, these are the days it gives you a chance to buy into this type of stock. Weatherford is another oil stock, kind of a little bit weak. Onto um yeah, some tech stocks not as strong, you know, like some semiconductor stock, but it's trading more and more tight, like a pendant. Again, so this overall is a good pattern, right? It's like it went up this much and it gave back like not even half of the gain, not even half, like one third maybe, right? So that's overall is a constructive pattern in the long term. ANET, same thing, right? Like, but right now it's weakening, so it's below the 10-day. So I prefer stocks at 10-day, anything above 10-day,
Mm-hmm.
because right now the market is super weak, right? GNPR, another networking stock. So so mostly holding about 21 and 20. This one a little bit more volatile. You can see a few times it dropped below 10, and this one too. So, but it's on the uptrend still overall. Um, NBO, this one I just added, another health stock. This one, yeah, it's trending nicely. Look at this. Look at this week, right? It broke
Wow.
out, and look at this week. It's an up week. Like most stocks are down this week, but
Yeah.
this stock is on the uptrend. So this is big cap, no, 294. But yeah, it's interesting. Like I feel like it's not consistent, right? Like that's what I'm trying to say this whole time. Is we're seeing stocks in each sector not consistent. We have some stronger ones that are holding way above 10-day. We have some that are at the 10-day, and then we have some that are below the 10 or even 21-day. And then like
Mm-hmm.
this one is another really outstanding stock. Look at this 10-day like trend, crazy. Of course, it went too far and then now it pulled back slightly, close at the bottom, but it could still continue to trend, right? Follow this trend. So it's just right now it broke out. It's, again, not many stocks breaks out and make 20%. You know,
Yes.
not many stocks. Um, but at times like this, when there's a down week, this is one of the few stocks that are up, very few. So this is really high potential. There's more solar stocks here, AEIS. Oh, this is no, sorry, this is chip stock as well. So see, when you look at the weekly chart, it's like nothing. Even like I said, this is like a down week, but it's like nothing. It's just like building a cup with handle base, right? So that's why I said the stocks, most of these leading stocks, even though they have weakened, but if you look at the weekly picture, it hasn't crashed, it hasn't break up down from this bigger pattern, right? They're still in a bullish pattern, a cup with handle pattern. Um, so I'm still optimistic. This is what I'm trying to say, right? Don't discount, like I said, this Tuesday, Wednesday. Even though the chances are very low, but don't discount it. No. So this one has some power, starting to fall again below the 10-day. So I don't know how much more for those that are falling below 10-day. But as you see, we have this cup with handle pattern. Most stocks will fall, make this handle, and probably the biggest sign is we have a lower price action, right? So now we need to check the volume, and the volume. Look at the red bars, right? Very low. Look at the blue bars, much higher, right?
Mm-hmm. Mm-hmm.
Right? Except this one day. But overall, this is constructive. That's exactly what you want to see. Not one day of high volume selling. That's how you tell. Like that's how you tell whether yes, it is going. The price action is going lower, but it's a constructive pattern in terms of um, the overall. like when you look at the weekly basis, right?
Yes.
It's very low volume, building a nice handle right now. And then as soon as we see a bounce, it's going to break out this handle. And so this is really nice. It's just very constructive. Um, yeah, I think we pretty much near the bottom of this list. Like I usually don't want to go past 50, but GLP is one that shows up on Friday. Right, see a bounce right here. This is surprisingly, this is oil and gas. Um, yeah, I don't know what happened that day, if there's news on this stuff, but it was showing up on the screen on one of the IBD screen. Yeah, so look at this volume. Look at this. Look at this. This is called skyscraper volume. Something is happening with this stock. I don't know the news. I only saw it on the screen. No one talks about this, but it did. It's now number 55. So something is happening to this stock, and it's at new high, right? So something to pay. I don't know why, but if I look at something similar, let me see. We are all PBF. This one at the top, PBF.
Mm-hmm.
I just want to see if anything happened in this sector that I don't know why. When I click on it, yeah. See, this is going down. Look at that. We are PBF. Let me see. Yeah, this one. So obviously the whole sector is going down, but I don't know what happened in this stock. It was up. I don't know if there was news or something. Anyhow, we'll have to look into it further. ARMK was one that shows up on Friday as well. Let's look at it. Okay, very tight action. Wow, that's really tight. Oh my. Like you have this uptrend and then it goes sideways like so tight. This is really good action. Commercial service outsourcing. So another industrial stock. Look at this. It fell below 10-day, 1 day, and then boom, came back up. That's exactly what you want to see. Technically, that's a big shakeout. Look, oh wow, Thursday volume. Wow. Well, I don't know what happened there. Interesting. Um, yeah. So, sorry, I was gonna look at something else. What was I gonna look at? I forgot. Okay, I was just gonna jump to my notes. I'm sure it'll come back. Okay, so we look at XL. Okay, so we look at XLY, look at XLP. That's the staples, right? So staples. So everyone's talking about this, right? Like the staples and the discretionary stocks. It's like they're going the opposite way, and this is that's why there's a highest. Like this is what people are talking about right now because
Mm-hmm.
what happened is that um, the staples are more favorable in recession, and discretionary are more like you know bad in recession, right? So that's something to pay attention to, because if this trend changes, then obviously recession may be less likely or less mild, right? We talk about USO, FFTY. So this is the growth stock IBD growth stock index. Um, Look at this. It's really bad. Um, so this is saying most IBD growth stocks are doing bad. It's on a downtrend. Look at that. It's making new low, right? Making new low this week. Really bad for growth stocks right now. They got hammered. So it's not good. And part of that reason is probably because a lot of oil and gas stocks got hit. I don't know. I don't know what's on the IBD list, but anyhow. Um, so this was happening on Wednesday when I document this. So if I jump back to S&P. So yeah, so Wednesday was what we call inside day, right? Because it was inside the Tuesday's range. And then Thursday, it got out of that, it broke out, right? Broke out on after Wednesday's price. So that's what we call like, it tried to resolve. And then Friday we have I don't know if this is outside day. Let me see, because that makes a big difference. 3974. Yeah, it is an outside day. So Friday reversed that. So this market is super tricky. It's all over the map right now. So that doesn't mean anything on Wednesday. Usually when it resolves to one side, it continue, but Friday it reversed that on the outside day again. So that's really bad, right? So Friday outside day. reverse trend. We talk about buying a pullback versus breakout. It's very tough. We talk about end phase. A lot of people got hit hard. Weekly chart. We talk about more this time about weekly chart because it's important to look at from a
Mm.
bigger perspective, not just daily. Especially now, it's uncertainty, lots of uncertainty. We also talk about risk reward ratio, how to handle that, in different types of markets. So, what else? There's one more thing I want to cover. Forgot now. Oh yeah, the only other thing I want to look at is we go to the spread. This is continue to be interesting.
100. Yeah.
It continue to go lower. This is why so many analysts are bearish. It just keep going and going. Um, Let me look at more recent time frame. 22, 21, fine. Okay, so it did bounce back a little bit to 0.84 Wednesday, 0.83 Thursday. Oh, Friday it bounced a lot, 0.76. Interesting. Huh. Okay. So there's a bounce on Tuesday and Friday. That's interesting. I didn't expect that. But but that's why some people on Friday say, "Oh, that's weird that the yield jump back, um, drop, and then the differential is less, but yet the market didn't jump." So that was because normally the market will bounce on when the yield, you know, drops, right? But it didn't this time, so that's also weird. I don't know. I don't know what to make of it. But in general, this is a downtrend, and um, we'll see this week. It's gonna be big, right? What will happen? I think this will be a telltale sign if like whether what the Fed will say Thursday, Friday. I mean, sorry, Tuesday, Wednesday. I can't believe we're ending this year at this level. It's just insane. um, and what else we want to say here? We still have, like I said, we still have a good, 3 weeks, but really there's not many trading sessions left.
Mhm.
Um, so it's unlikely the market will move like unless something happened Tuesday, Wednesday. I really can't see too much happening. There's probably like 13 trading sessions left because yeah, 26, 27 is usually off. So 13 trading sessions left. I mean, it could, like I said, it could go as far as like something like this or something like this range. Either, excuse me, either it close here, 4100. Yeah, 4100 is right here. 3900 is right here. It may resolve to slightly further, something like that. Yeah, and then New Year we'll see what will happen. But I think short term it's going to break out of this range one way or the other. Right now, right now the chance are 75% this way, 25% this way. But I give it a pretty high number, 25%. I bet you a lot of analysts give it like 5%. The only one who are bullish are Tom Lee and Cathy Woods. uh,
Yeah.
but yeah, but that's why I feel like um, yeah. Again, this level is critical. I would like if you want to trade in this stock market, that line, that's where I would draw the line near the 3900 level. Yeah, right there,
Mm.
right. So right now because we're near the bottom of the range, um, but like I said, the only reason why I wouldn't trade too much right now is because Tuesday's move is pre-market and it could move either way big, and I don't want to take that risk. Like it's not, you can't really put a stop, right? Like even if you want to put a 1% stop, you couldn't do it because after pre-market opens, you could be down 3%, right? So
Mhm.
that's the only. So don't like I said, unless you're holding something that's really strong, then that's like you can take that risk. You up 5% and you risk that 5% uh that morning, right? But otherwise, it's kind of tough. Yeah. Plus, I think you know the technical picture sucks right now. So the only way the way it will change is the fundamentals, right? So that's the only way it will change it. Change that course. This is the slope. So yeah, wow. I really would hate to see it come back down to 3,500.
Yeah.
Like that's what that's what Jim Ropel said. He's like he's hoping for it. He's because he said that this thing won't end until the worst of the worst happen. And if it happens again the third time, this year will be the worst year in a long time, right? Since probably 2000 or 2002. So, um, yeah, the only other thing I would say, if I look at a lot of talks about like bonds, right? So if I look at
Mhm.
HYG, see, it's already climbing back, right? So they're saying right now is the best time to buy bonds, right? Even RBC newsletter was saying, hey, telling all their advisors, hey, it's the best time to look at bonds because it has dropped a lot this year,
Mhm.
and and it's paying good yield, right? So the strategy going into 2023, despite it's a recession year, they're advising all their investors to look at to balance their portfolio with more bonds, right? Because it's going up, as well as you're getting high yield from it, and also dividend growth stocks, right? Um,
Mhm.
so stocks that will pay dividends that are growing, right? So even if it's a bad market, that's okay. Um, as long as the dividend are growing, you'll be safe, right? Because they will cover the loss or whatever. Or in some cases, the stock might still do okay. So yeah, so that's kind of the strategy that most advisors will employ next year, and so that's why equities will be still weak because people are moving money to cash into bonds, and also, well, some equities will do okay, like dividend growth ones. So uh, if I have to guess, like Gil, if I go back to like some health stock, 3.3% yield, right? What was the other one we looked at that was big? Uh, NVO. Let me just look it up. That was big too. Okay, this one no, this one's small. I don't know why this one's more than that. Because I was thinking that maybe some of the bigger stocks the advisors are choosing are going to be the ones with higher yields. That's the reason why, like, if we go back to oil and gas, right? Like Exxon, see, this is why like these stocks are holding up better than the oil price. Like this week it broke down. See, it broke down, but it was holding up so strong because everyone's like, hey, not obviously not all advisors, but some, right? Like not maybe not that big percentage. But health stock is probably still one of the most defensive stocks for any recession type. So like yo, Merck, let me see, Merck. Okay, so those are around 3%. See, these are the where people are hiding their money right now. Or they're trying to stay defensive, right? Amgen, right, 2.8%, and the stock's still on the trend upward. Um, Lily, well, this one really low, you know, but yeah. So so that's where some people want to like. These are for longer term investors. They want to that's what next year will be like. This is where people will start to put in money in bonds, just because it's already. I think they already expect that the yield will continue to drop from here because of recession. Um, so this is a long-term trend line right here. Wow, interesting. Yeah, 200 days coming down. Yeah. So if you want to have a more balanced portfolio, then yeah, I think that's what will happen next year. A lot of people lose money on bonds this year. So people when they're gonna add money to their portfolio next year, they're gonna add into bonds most likely because right now it's paying good yield and low price, right, to buy. So look at this one. Crazy. We went almost as far as near that low. Look at that. Amazing. 70. Yeah. And it was around 80 something before at the top. So yeah. Does it say how much yield? Okay, 5%. Right here, 5%. Yeah. Anyhow, that's for long-term investing. Anything else you can think of?
Mm.
Yeah, it's gonna be a big week this week, so it's gonna move the market. I think it will move the market. Um, and then hopefully it will center rally. But worst case scenario, like I said, 3,900. If it breaks below that on S&P, it'll be bad. It'll be you know, like I don't expect it to like drop like a rock. It probably drop this whole week, and then maybe some rebound next week,
Mhm.
right? That's kind of what I'm anticipating. Because here's the one thing that I was looking at. If I go to S&P and go to daily, and you look at stochastic, I was surprised how fast this has dropped. Look at that.
Yeah,
So people are really fearful right now. Like even though like on the index level it doesn't look that bad, but on the stochastic it's showing people are really selling. Um, you know, like I was surprised how fast this dropped. So that's why like it's almost like it's too obvious right now is what I'm trying to say, right? So that's why I'm a little bit, I don't want to say I'm bullish, but I feel like that there's a chance that the stock could bounce. And people, when it bounce, people are not going to believe it. It's like, and then it'll keep going. People are not going to believe this because they don't think like anything good will happen next year, right? Like the mentality going into 2023 is they think that things are going to be bad. So why would you hold stocks, right? So that's why a lot of people are selling right now. But again, we didn't even see one day out of 5 days of selling. We didn't even see 6 days actually, 6 out of 7 days. We didn't see one above average volume here. So that's the slightly positive side,
yeah.
right? So and then we have this big update from Fed's talk last time, which everyone is still surprised. Um, that's why I said, like, the Fed could surprise a lot of people this time too, if the CPI number comes out much weaker. And um, yeah, I would say don't discount it. I feel like there's a chance, and it might work this time. Like this might be the time that it actually worked when everyone just gave up. It's like, yeah, it's not gonna work. Like everyone's like thinking it's a recession, it's gonna go down. So um, we were thinking that a week ago, but everyone was thinking out the same thing. But this time now it's the opposite. Everyone's thinking it going down now. So again, we could get a surprise, right? Like psychology is very important in the marketplace. Um, but obviously it has to be backed by fundamental use. So uh, yeah, we'll see. Good stuff, man.
Yeah, yeah, interesting stuff.
Yeah, yeah. I was really surprised how fast it's dropping. Because even here, right here, this drop. Look at this. It didn't even drop halfway. But this one is dropping so fast. I was surprised that people are actually selling that fast. Anyhow, but the volume is not there. That's the key. You know, but the sentiment is bad. So all right, all right.
Mhm.
Thanks, Sunil. We'll chat
Yeah,
next time.